Hi, this is Angel Aguiar, and right now we're going to go over the second part of accounting relationships and market clearing conditions. Okay, so in part one of this presentation, we discussed GTAP sets and accounting relationships. In this part two, we're going to cover market clearing equations and review other balancing conditions. Some of these will be further discussed in their own lectures, so this is just a review. The market clearing equations for commodities and endowment basically entail this. Domestic production is equal to total sales, margin or non-margin. Import supply is going to be equal to import demand. And endowment supply has to be equal to endowment demand. Again, everything is being exhaustive in the model, so you're not going to be having anything left unused or for inventory. The market clearing equations for good is represented on the top in this slide. This is in linearized form, and this is how you will observe it in the GTAP model. It basically assures that all the commodities, in this case in volume term and quantities, are going to be used exhaustively. Here is your domestic sales and your exports. And if we're dealing with a margin type of commodity, if C is a margin, then you also have to sell it to the global transportation pool. In terms of the equation below, this is assuring that the import goods are also going to be used exhaustively. You'll see here, similarly, that we have now spelled out which are the agents, firms, private consumption, government consumption, or investment. This is not really a market clearing equation, rather than an accounting equation, because the only price that clears the markets is the PDS, and all of the other prices are basically revolve around it with the different taxes or transportation. The market clearing equation for mobile endowment is given by this type of equation in value form and in percentage change form. The cost of endowment E may include a tax or a subsidy represented by a variable TFE. In the standard model, QE is exogenous, and the mobile endowments typically, as you saw from your GTAP set, include labor, types, and capital. The market clearing equations for sluggish endowments is represented here. On the left-hand side, we have values, and on the right-hand side, we have the percentage change form. The supply of sluggish endowments by activity is provided by this CET specification, constant elasticity of transformation, where the allocation of the aggregate endowment QE across activities responds to changes in relative prices and the elasticity given by E tray E. This is equation E underscore QES2 in the model. In the standard model, QE is typically exogenous, and the sluggish endowment is typically land resources. Given their nature, the transformation elasticity of land resources is typically close to zero. The market clearing equation for sector-specific endowments is equation underscore PEB in the model, and it simply sets supply equal to demand for each activity. In the standard closure of the model, QES is exogenous. Now let's review other balancing conditions. We'll talk about regional income constraint, the global bank, and the global transportation services. There are two specific lectures on global bank and global transportation services. This is just a review for you. They will go more into detail. The regional income constraint, as you saw from before, given the regional household assumption, is that total income is equal to your expenditure on private goods, government goods, and savings. Because of the regional household assumption, all income goes to the regional household, and that is basically the factor income that the regional household receives because it's the owner of these endowments, plus the income that they receive from the tax receipts. In this equation, you can see that even if taxes don't change, if your simulation causes the activities to increase, you will receive more income. The household is going to receive more income. But if you also change your taxes, maybe a tariff liberalization, you will also be affecting your level of income. So, and there may be some conflicting forces here in the sense of reducing your tariff might reduce your income, but if it generates more activity, then you may be increasing tax receipts from other sources. Finally, there is an income slack that will allow you to turn this equation on and off if you so choose in your closure specification. These are a list of all the indirect tax revenues that we have in the GTAP model. You see that it's very comprehensive. We have tax revenue coming from the private consumption or government consumption, investment or intermediate consumption, even factor endowments by each activity are being taxed. You have total revenue from production tax payments in region R. Your export taxes and import taxes are included. Moving on to the global bank slide on savings and investment, this is simply stating that all savings for each country in the GTAP database will be allocated to a global bank that from there is going to be reallocated into the as net investment into all the countries in the GTAP database, and simply that all the resources are going to be used, are stated numerically in the bottom equations. And as I mentioned before, we'll have another session exclusively to discuss about the global bank. So this is all I will say from here. With respect to transportation, this slide just to show you again that whatever is available in terms of supply has to be equal to the demand of transportation margins. We have each country producing a margin good, where margin can be, in this case of the aggregation, is basically your services component. Not all of it, just a portion of it. If you had a different aggregation, it would be different elements of it, provided by Sub-Saharan Africa, the EU, of rest of the world. That's the total available supply of margin M, goes into this global transportation pool, and from there is going to be used by each of the countries demanding, and is distinguished by margin, by commodity, and from source to destination. And again, all we're trying to say here is that there's not going to be any unused offering of margin services, that everything has to be used. This concludes the sessions on accounting relationships and market clearing conditions. Thank you for your attention.